And to double down on your topic, I think that we still didn't saw the moment where people were actually trusting digital banks more than traditional banking, at least in Europe. So I think that we are in that process right now, but we are still not there.
These kinds of things just take time. And when you're talking about like, where do I put my money? Then just the fact that if a new entrant to the market has been around for not just like, yeah, we founded this company like 2 months ago, but if you've been around for 10 years, that already is this stamp of hey, okay, there is longevity in this business. This is a trustworthy business. What has also helped is that we're starting to see like ourselves profitable neobanks. And that's of course also like, where do I put my money? I put it in an entity that kind of constantly has to be replenished with VC money or like a solid business that is actually generating profits and therefore has this kind of like longevity built in. So I think on one hand is just really time has done its magic. And then also like are we over the next 5 years going to see, well, what we call neobank segment or new entrants kind of really becoming a force to be reckoned with against traditional banks? Are traditional banks really starting to actually kind of start to significantly lose not just market share, but also the share of revenues to new entrants, but more and more kind of the services that we're building, the customers that we're attracting, the customers that we're targeting are the bona fide SMEs from 10 to 50 people companies. And over the next 5 years, I'm sure that neobanks will also start to service the kind of genuine mid-sized companies from like 50 to 250 employees. And that's where kind of like we really then start to see kind of large revenue pools going from traditional banks to neobanks, because of course, numerically, these are not such huge customer pools as a share of revenues of business customers. They're of course where really the larger pools of revenue are.